Good morning, good afternoon, good evening. Welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for October 10th, 2009. And blog.Accendo Traders is our website where we put together video, technical analysis trading plans on a daily basis. And we are a firm believer in trading plans, having a system that removes emotions out of our trading so that we know how to prepare for each trading day. But more importantly, our trading plan allows us to focus and have time to spend with family. The week that was, well, it was a good week for the bulls. The market ended up about 4.5% on the S&P 500. We had, as we talked about last week, we went down and tested the 50, and we bounced right from there. However, when it came to what was really our catalyst, it really came down to what we thought it was going to be was the kickoff of the third quarter earnings season. Now, on Monday, we did have some little news. One of the things that you might want to get in a routine, especially if you're a futures trader, futures opens at 6 o'clock on Sunday, and you gotta go to Bloomberg and all these news sources and find out what's going on as far as the news. But on Monday, we had a little interest rate hike in Australia. Later in the week, their unemployment number came down. That was a catalyst for the market. And we also had our third quarter earnings season kickoff this week. And of course, that's without Alcoa. Their numbers were better, their profits were better. They cut jobs, they cut their staff, and so therefore they were able to beat their numbers. This week, we don't have a lot of economic news coming on. We do have the FOMC minutes on Wednesday, retail sales numbers on Wednesday. Our normal initial claims, what's going to go there, and not important on Friday. So once again, what's going to be our catalyst? Well, that's going to be our earnings for next week. So again, we don't have anything coming up on Monday, but you can see this week we have Google this week, Goldman Sachs, Citigroup, JP Morgan, Steel Dynamics, IBM. So we got some big weeks coming in. I believe really not until Wednesday as far as earnings, and there's nothing on the splits calendar. So let's go look at our charts and see what type of support and resistance we need to be aware of. Alright, so what do we have? We have our last week move that came down and tested the 50 moving average. And we said, well, there's two things that either have to happen. Either we need to go back and confirm our past swing high and make a new one, or we were looking at the 100 moving average and looking at what was a possible next stopping point if we were to break the 50 moving average. And we can see obviously the 50 moving average held up, and we've come up and retested the swing high. And so now we either have to make a new high here, or we have a double top. Let's go to the NASDAQ. Kind of same thing here. Didn't quite make the 50. Has come up, has yet to actually get to the high of this past swing high, but we have come up to test it. So again, the same thing. Either we have to continue up, or we have a double top, and we're going to retest the 50 moving average. S&P 500, exactly like the Dow, looks beautiful. So let's go ahead and switch over to the monthly chart and see what that looks like. Well, now, last week we focused on the resistance of the 20 moving average, and that last week pushed us lower. Well, now, once again, we're above it. So as long as we're above it, what's our next target? Well, it's the 50 moving average. So that certainly bodes well for if we have some good earnings to go ahead and run up there and test that. Let's go to the NASDAQ. NASDAQ, you can see, has been a really nice high range. We talked about the 50 moving average being the resistance. We pulled back, but now our October candle is moving up. But you can see some of the lines I have drawn in from different time frames, and NASDAQ's really been a beautiful uptrend move. Finally, with the Dow, we can see again we are now above that 20 moving average. So the next target is going to be 50 if we continue to move higher. But again, let's look at our volume. Since this move, since the March move upwards, our volume has continually dropped. Yet, look at October. Now this is just an average. It's saying if October was to continue to move on from here, this is what we would have. So let's talk about that. We talked about, obviously we retest the highs from last week for the last 2 weeks, but the volume really wasn't great for this week. So let's look at the internals. And what we can see, obviously our numbers are up for this week. We have green days, but again, look at the volume. So we had our volume went down, went down, went down, and even on our big day on Monday, our volume continues to be down. Breadth was bullish though. Any number above 0.5 is bullish, below 0.5 is bearish. So that we did get a pickup in volume, went down, pick up again. Look at Friday's move. Friday's move was a big drop off on volume, which is why our breadth is not that great. So with Monday and Tuesday being low on news, it'll be interesting again to see if the buyers will come in and move the market higher, or will the bears be able to say, nope, let's go back and test the 50 until we get to Wednesday and some of the big earnings, and maybe the FOMC minutes will have something for us. So it's real important to see that as far as our breadth is neutral. Breadth is neutral, our volume is neutral. And here are a couple sectors to look at. Again, they're also, as you can see, tested the 50 and moved higher. I mean, look at energy. It actually is making a new swing high. You can say the same thing here for oil. Very nice. And then the metals, gold. Here's metals. Steel looks good. And gold made that quick high and then kind of pulled back a little bit on Friday. Certainly looks really good. And then remember, Goldman Sachs at the beginning of the week upgraded the financial services, and lo and behold, financial services upgrading financial services. But they look pretty good. Regional brokerages. See, what you want to do is find these sectors, and then find the stocks that are within them, and then use that as a guide. Check out drugs. Although we have been channeling a little bit here, and may have a triple top, but interesting. Retail. Remember, we have retail numbers coming out on Wednesday, and we are going into our holiday shopping, so retail may be able to hold up. And then we have computers. Hardware looks good, and the software also looks good. We're going to go ahead and move into our educational portion of our video. As you guys know, we're using the book Trading in the Zone by Mark Douglas. And in this section, he's talking about the importance of getting your mind in sync with the market. And the first step to that, he says, is to understand and accept the psychological realities of trading. Now, we all know that I'm a huge proponent of trading plans. That's what I believe in. I think they're very important. And a lot of people agree with me. And yes, it's very important. There's way too many traders out there losing money because they have no system in place. They just follow person from person to person. You got to have your own system. But that's not the only thing, because we know indicators fail, chart patterns fail, and systems fail. You're not going to hit a home run every time. You're not going to be right all the time. And you have to be able to accept that. And so that is the psychological reality of trading. You will be wrong. Patterns fail. And so do have the right mindset developed so that when you fail, you don't immediately drop your system and go to the next hottest indicator, hottest system, or are you just tweaking your system? Again, you have to be always educating yourself, but educating yourself doesn't mean following the latest fad. So with that in mind, our 5 good minutes today is about developing the ultimate trading psychology. So there's a website called, Ultimate Trading Psychology that helps you develop the right mindset. They have a free 5-part audio series about developing the right mindset for trading, helping you develop what to do when you start having that internal conflict in your mind about good and bad trades. So a really good 5-part audio system. It's endorsed by Dave Elliott, and let me take a quick moment to again wish him a speedy recovery as he's going through his therapy, for his medical conditions. So obviously we want to wish him the best for him and his family, Allison. And but he endorses this system. I endorse the system. Again, Ultimate Trading Psychology, developing the right mindset to be a successful trader. Follow us on Twitter, and we've got the podcast going back again. So if you want to just go ahead and have these things automatically loaded up into your iTunes for your iPods, there's the link for that. Thanks, guys, and I'll see you next time. So if you go to accendotraders.com/trading psychology.html, it was on the last page, it will forward you to this page here. And again, endorsed by Dave Elliott, and down here is Ron Anari from Option University. And more importantly, you can see the free 5-part audio tracking system on developing, being consistent, profitable, and developing the right mindset for the market.